This is Dustin with Dustin's Dollars. Today I have updated my valuation model for Driftwood LNG, really for Tellurian and their value Driftwood LNG given phase one. And so I'm going to be going over that today. Before I begin, let me remind you that I'm not a financial advisor or a financial professional of any sort. All opinions I express in this video are mine and do not represent those of any company or any other individual. I currently hold a long position in Tellurian, so this video should be for your entertainment purposes only, because I could be wrong about everything I say in this video, and you need to do your own research before making any investment decisions. So today I'm going over this valuation model. It's actually in the second tab on the spreadsheet. The spreadsheet is linked in the description below, and I'm going to be going over this today. It is updated based off of the new visibility that we got into their capital structure, as they're calling it, for Driftwood, how they're going to finance this, and I'm going to go through this today. And one more caveat before I actually start going through it: this is just a model, and so let me remind you of one of my favorite quotes from a guy named George Box, apparently. All models are wrong, but some are useful, right? So this model is going to be wrong. There's a lot of assumptions in it, but hopefully it is useful for helping you think through the valuation of Tellurian given Driftwood LNG phase one. And I provided the spreadsheet so that you can put in your own numbers and see how that changes in the model there and what that means. All right, now let me walk through this model real quick. Starting off at the top, have some base assumptions. These are first piece of information here: the capacity of Driftwood LNG phase one. That's pretty well known, right? This take comes directly off of their corporate presentation. It hasn't changed for a while. I think that's a known quantity. Now, the second piece here, this is, what percent of equity ownership is Tellurian going to have for Driftwood LNG phase one? So they've looked at it from here, on this corporate presentation. They said Tellurian is looking to, for other folks to buy 35 to 40% of the equity of Driftwood LNG phase one. I think there was a recent interview where Sharif Suki said 40 to 45%. For this particular, right now I plugged in 58%, right? That would be if somebody else bought 42%. So that's right in the middle of that 40 and 45% range. Overall, I'm going to try to put in what I think are realistic but semi-conservative numbers. And again, this is why I provide the spreadsheet for you to use. You can download, make a copy and modify the numbers to your heart's content and see what that does to the overall valuation. If you want to try to, use a more bullish or bearish number here in for anything. So that's sort of like the one overall base assumption you have to make in order to do your valuation. A couple other things here when we talk about their, actual LNG sales. We don't really have visibility in this right now. There's maybe an agreement with Gunvor. It's kind of a soft agreement anyways for as long as they have it. For folks who've looked into it, it's kind of cancelable on both sides at this point. And we really don't know what they're going to do with the rest of it. But I just put in some assumptions here. I put in the price for JKM and TTF. I got these numbers from the futures from CME Group for 2027, 2028. I just kind of took the average of all of those numbers. I'm looking at those time frames because that's when Driftwood is going to start shipping LNG. Hopefully, cross your fingers. And so that's what the numbers came out to when I pulled the most recent values for this futures, I think, over the weekend. So they're a couple days out of date, probably still pretty close. And then I guessed at what discount Tellurian is going to give to the folks that they're selling the LNG. And so I really don't know what is a realistic number here. I just am assuming 10%. And then I put in some also numbers for the transportation cost per MMBTU, both to Asia for sales that would be indexed to JKM, and then to Europe for sales that would be indexed to TTF. And then we have to sort of divine or guess how much of their LNG sales are going to be indexed to JKM versus indexed to TTF. So overall, you can make a number here. I just put in 50%. Hopefully it's 50-50. We'll see. And in the end, that gets you add all that up, you get the formula here, and comes up with a number of, for their LNG sales revenue. Right now, all those numbers as I put in gets you to $4.75 billion per year in revenue for Tellurian. Again, this is probably one of the pieces we have the least visibility into as of now, since they had some of their contracts expire. So you kind of have to just put in your own assumptions here and see how that changes the valuation. All right, now if we go to their gas sourcing, this is just, hey, they're purchasing gas at Henry Hub. They're going to need, 0.87 BCF per day for Tellurian. And again, this number actually changes based off of what you put in the model for what percent of equity of Driftwood LNG do you think they're going to own. With 58%, they'd need 0.87 BCF per day of gas sourcing. And for at this point in the model, I'm just saying, hey, they buy all that from Henry Hub, and then they have about 50 cents per MMBTU of gas transportation costs. I should probably format that as an actual dollar value, and then that gets you to total costs of them purchasing the gas that has to be liquefied of $1.5 billion per year. I recognize that they also produce their own gas. I have a separate section below talking about that. Now, then we get to the actual financing of Driftwood for the debt portion, and I am largely going off of their corporate presentation here, where they say we think we're going to have $7 billion of project debt and $1.5 billion of project bonds. And so I modeled both of those out here and said, hey, they have the project debt. I'm really not sure what is what interest rates are going to be able to get on those. I put in 10% for the larger portion for the project debt, 15% for the the smaller portion of the project bonds. And then in terms of duration, I put in my notes here, this column, that these are guesses. I guess maybe 20 years for the project debt and maybe 15 years for the project bonds. Really hard to say. We won't know until we know. So calculate all of that, and then you can look at what their interest is per year that they're going to have to pay on that debt, and that gets you to just under $1 billion per year in in debt service costs. So we can pull all that together and kind of look at what are the overall financials for Tellurian for that, what they call their midstream segment, and this is their liquefaction at Driftwood. So this is also pulled from their corporate presentation. They say $1 per MMBTU for their operating expenses at Driftwood. So that's for the overall plant, and then I prorate that based off of Tellurian's ownership of Driftwood LNG Phase 1, because I assume that the remainder of those operating expenses that are, again, owned by this other partner that owns part of Driftwood LNG Phase 1, that they're buying their LNG at cost, and that means that they are paying that portion of the operating expenses. So again, sort of top to bottom, the financials for the midstream segment of Tellurian in this model would be, the LNG revenue we pulled from above, $4.75 billion. Subtract off the $1.5 billion cost of gas that came from the model above, their Tellurian's prorated portion of the operating expenses at Driftwood, and then subtract off the debt interest, and there you get their actual sort of, I call it operating profit. Maybe it's free cash flow is not yet, have to subtract off the G&A, but operating profit from this segment of just right about $2 billion per year in this model. And I know that's that's a tad under what the projections are here, and you can again put in your you can see in the model where some of my assumptions differ from theirs. But that it is what it is. And so $2 billion per year in operating profit from the midstream. Now, then we also have the upstream segment. Again, this, if you're familiar with Tellurian, this is what lets them kind of offset a bit of the risk that gas prices are going to go very high, and lets them have that, quote unquote, physical hedge. And so when they have this, they're going to, I assume they will in 2027 be able to produce about 0.3 BCF per day. In Q4 they were at 225 MMCF per day, or 0.225 BCF per day, and so this would be 33% above what they're currently producing, their current rate. I know that they don't really plan to increase their production in 2023, but I think at some point, between now and 2027, I assume they're going to increase their rate of production of the natural gas. So I'm assuming this is, I think, a pretty conservative assumption for how much they're going to increase their gas production, that it's going to only increase by 33% in a 4-year time span. Hi, Transient Stacker. Thanks for joining the stream. Glad to have you. I'm going through the Tellurian, my updated Tellurian Driftwood LNG Phase 1 valuation model. So right now I'm looking at the upstream financials, and again, they if they produce 0.3 BCF per day, they have their operating expenses. I took this from their most recent quarter's results, about just under $1 per MMBTU, and then so they given the Henry Hub price that I use in the model, that this was pulled from up here, so I'm using the same number, $4.20 per MMBTU. That was again pulled from the what I could see for the futures prices for Henry Hub for 2027, 2028. That would get them revenues of just under $500 million per year. They have their operating expenses there, that's multiplied off of this number from their Q4 results. That would get them $360 million per year in operating profit from that upstream segment. So put it all together, including Driftwood LNG phase 1 in 2027, or maybe average 2027, 2028, you could say Tell's overall financials for their upstream and their midstream segment, and then just including the G&A, would be, $360 million per year in profit from upstream, about $2 billion per year in profit from their midstream. And then I kind of guessed at their G&A. I assume this is going to go up quite a bit in the next 4 years as they really ramp up and are operating Driftwood. Who knows? Again, you might have a different opinion, but I put in $300 million per year in G&A costs, and that would get an overall Tellurian, free cash flow per year, in 2027, 2028 of a tad over $2 billion per year. So that's kind of like the picture of Tellurian as a company at that point. Now, in order for us to then kind of value the stock, what I did here is I sort of took a discounted cash flow of their first 10 years of operations, although I'm assuming that their cash flow is the same in all those 10 years of operation. So I assumed this number here of $2.07 billion per year in free cash flow, and I assume they're going to make that for 10 years straight, each of those years. And that's going to start 4 years from now, right? That they're going to start in 2027, and that so we discount that at a 12% rate over 10 years there, and that gets us to sort of a net present value for those 10 years of $8.3 billion. I got a question on the stream, Transit Stacker. I'll give you my thoughts on that in just a minute because I'm almost through going through this model. And then we can talk about that. It's interesting. So let me get through this as quickly as I can. Then I also wanted to have some sort of a terminal value, and I think this is, in my opinion, a very, very conservative valuation for the terminal value of Driftwood after those first 10 years, because it will continue to be I assume they're going to continue operating this for 30 years or 40 years. But I at least wanted a conservative valuation for this model, because it's kind of hard to tell what their actual free cash flows are going to be more than 14 years out, frankly. So I just did it sort of an asset valuation. I said, hey, it's going to be let's say 1/3 of the way through its lifetime. Say it's only worth 2/3 of the original value, so that puts it at $6.6 billion. Discount that back to today at the same discount rate, and that gets you a $1.3 billion in net present value from that. Add those together, and you would get a total DCF valuation of $9.6 billion from sort of the discounted cash flow model here. And then when you want to translate that into Tellurian as an actual stock, the future shares outstanding. Hi, James. Thanks for joining the stream. I'm going to get to this in just a second because I'm almost through my valuation model. So you have to make an assumption about how many shares are going to be outstanding. As of right now, it's 560 million, include the convertible debt, and it's more like 660 million. I kind of put in a number. I assume they're going to do some additional dilution for some purpose, and let's just call it 800 million shares outstanding. You might think maybe they won't dilute nearly this much between here and there, but it's just a number I put in the model here. It does at least afford for some dilution. And then the one big outstanding piece is, what is the sort of drag on the equity from that outstanding debt? And this is kind of hard to model because I think it's disingenuous to call it, just calculate enterprise value like you would for a lot of companies, and what I would usually do, given that I kind of assume these are going to be very, very long-term bonds, 15 or 20 years, And so what I did was I just discounted that future payment that they're going to make on the principal back at this discount right here. And so that kind of gives you a negative $1 billion on the equity value. That's what I did here. Again, I think it's questionable in terms of how you would actually want to include that. That's how I did it here. So that's the net effect is a negative $1 billion on the valuation. You do include their sort of present debt of $50 million from the 2028 senior notes, and that all of that put together from this DCF and that negative impact of this debt divided out by the 800 million shares, that would give you sort of a net present value per share of Tellurian, net of debt, of $10.77 post FID or FNTP, whatever you want to call it, whatever milestone you would say substantially de-risks this and means that they have all the money in place. I think that would be FID. I think you could maybe make an argument between the two, but this is how I value things, and this is what I think is a lot of the upside that you could see in the next maybe I'm being too optimistic in the next year when they actually get all the financing in place and that this is largely de-risked, right? And I think if I'm going to interpret the fact that the stock today is at $1.40 rather than $10, rather than anywhere close to $10.77, the market is heavily discounting it's telling you the odds that the market thinks Driftwood is actually going to happen. So right now I think it's discounting it quite heavily. That's my personal interpretation. Again, as I like to say, could be very, very wrong, but that's how I see things. So that's the full walkthrough of the valuation model. Now I'm going to move on to the chat, and we'll talk about some of the fun speculative topics that are going on right now. So Transient Stacker asks, do you think Chesapeake will choose Driftwood? For folks who aren't aware and haven't followed this, Chesapeake and Gunvor made a deal to sell LNG, and they basically lined up everything other than the actual liquefaction facility. And it's a good question. I mean, the straight up answer is I don't know. I think it's pretty aggressive for it's pretty aggressive for a lot of facilities to to be delivering gas in liquefied gas in 2027. I think Tellurian is on a very, very short list of facilities that reasonably could make that happen. But it's hard to say, right? I certainly don't think it's 100%. I put the odds at like 50-50. I frankly am not up to speed on all of the facilities that are out there. I follow the publicly traded ones because I can kind of look at them in more detail than some of the private ones. But it's I think there's a quite a good possibility. Yeah, I wish I had more information. Something that's on my plate to sort of look into a little bit. It's fairly recent. It's one of the things that I want to look into a little bit more to see if there's any additional information I can glean from the news or from other just to do some more research. So if I find anything, I'll make at least a short video talking about it. So to share it with y'all, or maybe a YouTube post or something. I don't know, but it's certainly a strong possibility in my opinion. And I'm crossing my fingers. Obviously, I'm very hopeful. But it's certainly I wouldn't say it's above 50%, right? But I think 50% is a pretty good chance. And James asked thoughts on the recent lease assumption of 1,200 acres from G2. Yeah, that. So they talked about looking at a second site for an export facility years ago. I remember Meg, I think it was talked about it, that they were sort of had something potentially in the works. That was when they, I think, thought they were further along than they really were back in 2018 or 2019, somewhere in that time frame. Back when Meg used to do the Chat with Tell podcasts. But I don't know how you really come away with any conclusion there other than they're planning for the future, right? Because as much as they're far away from Driftwood, I think from completing Driftwood as it goes, I also think they're going to be, they're going to be looking for what to do after Driftwood, right? Like the company right now is kind of constrained in terms of there's just not that much more they can do. So yeah, I absolutely think that'll turn into something, assuming that Driftwood moves forward. One of the downsides I would say of this simplified model that I have here is it really is only looking at phase one. It's not looking at, the future phases of Driftwood, but, you know, they're pretty clear in the presentation. I think it's pretty credible to say, hey, I don't know where it is, where they basically say, phases 2 and 3, we're going to try to finance with cash flows. I don't know where it is. Somewhere in here. Oh yeah, plants 3 to 5 to be funded by cash flow from phase 1. And, so it basically, at FID of phase 1, it's kind of just only a matter of time, unless the LNG market crashes, right? I don't think that it will. But if you also take that assumption, Driftwood LNG phase 1 happening basically already means that the remainder of Driftwood is going to be built, right? Because they're going to finance it. They're going to have the cash to be able to push forward with that, even if they don't have everything in place. And it's going to be within their power at that point, because they're going to be making, hopefully, boatloads of money, and then they are going to need something after that. So I just think they're planning long term, and they came across, they had an opportunity, and they took it. I think that is actually one nice thing. One of the things I think is positive about Tellurian, I would say maybe two things that Tellurian has that other companies don't, right? You have, number one, you have just the management that's done this before, right? And they are actually looking to the future. And in particular, Suki, that I think is, probably has the biggest vision of, everybody. Like he clearly is just looking way towards the future and assumes things are going to get done, and is willing to take a lot of risk to get there. But then, the other thing, excuse me, sorry, but the thing that Tellurian is an actual operating company, and they have some cash on the books, and they're not just like looking at their cash of, great, this is our only runway we have, like, as a public competitor, your next decade, like, they're not bringing in any money. So they have to really, really conserve their cash on hand. They don't have any operations. And, it's harder for them to look at something that's this far in the future. Whereas I think Tellurian actually has this, has these options. And I think that's something that we, might even see in the future play out, where Tellurian has slightly more, wiggle room even now, to jump at these opportunities and plan for the long term. So, I mean, maybe that was all already known and obvious to you. Like, I don't have any specific insight into it. That's also on my list of things to, do more research on. But as of right now, I've really only probably read the same things most of y'all have. But I do know that this is something they've planned. I recall them talking about, they looked at maybe a second site for the future that they were talking about years ago, when they were, thought they were pretty far along in, Driftwood phase 1. And I definitely think that there's people at the company like Suki and others who are looking at this as saying, we do need to think 10 plus years out, and Driftwood might be complete in 2030. And that's, what are we going to do for, after that? How are we going to expand as a company? And there just aren't that many, there just aren't that many sites that you can actually build an LNG facility at. And so, when the opportunity comes along, like, I think they're going to think long term at it and snatch it up. If Suki's margin call is finished or more selling? I think there's still likely more shares to sell. I think there's a reasonable question. Like, we don't know, right? And one of the things is, how much. I think there's two things at play here, right? One is, how much cash do they actually need? How much has the value of that property that he put it up for fallen? But then the other thing here is there's some tension between, like, I don't know. I don't know of how they are actually accounting for this, if they're, using the trading price of the stock to then calculate how much margin remaining he has, because, the stock has been going down. And so that it might be a negative feedback cycle, where more selling drops the price, which then, sort of reduces the margin that he should have, which means they have to sell more, and it's sort of a cycle there. I know that there are more shares outstanding that could be sold. I don't have the number in front of me, I'm sorry. but I know that there are more shares. I also wonder if maybe, like, I think that the rate of selling had gone down recently. And I mean, I could probably pull it up real quick. Um, but I mean, it's possible that they've actually throttled the selling uh, lower because of the trading price, right? And if there was a day where there was some news and it popped up, they might sell a lot of it very quickly into the increased volume. Um, oh, it doesn't actually say on these, does it? Uh, yeah, I don't recall. There's because originally it was 25 million, and you can add it up. I don't have it in front of me right now. I apologize. Um, to be honest, I'm looking at this as a buying opportunity. I think it's artificial, right? Like the fact that somebody, is forcibly selling the stock right now is certainly is a short term, supply demand imbalance for the shares themselves. It has really nothing to do with the company long term, unless you really think, if I'm going to give my try to make my strongest bear case for this, which I think is pretty shaky, it would be that, that Suki now has less incentive to be invested, to keep working at the company and do a good job. But, he's got those options outstanding. I think they're listed right here, right? He's got, a third of your 3.3 million shares worth of options at, what's it, 350, 450, and 550. I mean, I guess the 550 options aren't vested yet, but they will if things are successful. And so if things are successful, he's going to have 10 million shares worth in options, and if the value of the stock is well above, 550, if it's $10 or $15, like that's going to be a heck of a lot of money for him. So I think he's still got plenty of incentive, uh, even after these shares are sold. James asks, the board and CFO departures clear room for equity partner appointments. I don't know about the board. The board one was interesting, right? Where they kind of made this. It was a weird filing. I've almost all of these departures that I've seen in companies when I'm invested in, or been following it all, they don't really give any color as to why the person left. They always have some boilerplate. It wasn't due to any personal disagreement. They resigned, yada yada yada. It's very infrequent for there to be anything else. The fact that they included this in the filing, that it's something like the board members were never comfortable with the risk profile of the company. It was strange. I personally don't know how to interpret that in terms of the CFO, which was much more recent. Does that clear the room for equity partners? I think that the board, maybe that's possible. Although it was a little weird that they had that verbiage, so I really don't know what to read into the board departures. And I think they can always add more people to the board. I've seen companies that have a lot of people on their board, so I don't know that necessarily is that they would have to lose board members in order to appoint new ones. For the CFO, I don't know. They were already on their second CFO that I saw, and uh, it's hard to say what the internal politics are at the company, especially for that seat, right? It's sort of a weird situation where there's a lot of really big personalities and you know Suki and Octavio and Martin Houston, for whatever he's in. Like, he doesn't seem to be very public, but that doesn't mean he doesn't have a huge hand in things, or a large opinion in things at the company. And the CFO was not, nobody of that notoriety, let's say. Yet the financing is really a huge task, and one of the biggest outstanding things for the company. So it's kind of hard to really differentiate what happened. I mean, I don't know that they were being pushed out for somebody else in particular, but I think it may just be that they didn't have the connections or weren't getting the job done, and I don't know. It's not surprising me, right? It may just be he got pushed out because he didn't seem like he was getting the job done, and they're going to put somebody else in there just to get the job done. So I don't know. All right. I think I'm gonna hop off if there's nothing else. Those are great questions. I wish I had better answers for you. I'm sorry. My hobby is making models to help myself cope with the fact that I'm down on my investment, and why I still think I have, confidence and have a thesis. I try to follow the news and have some, you know, do some research on those things, but it's I think we're at the the questions you're asking me are at the bleeding edge of what's going on with the company, and I just I don't have any more insight really than you. So I appreciate you hopping on. I appreciate the questions. I think you know there's certainly a lot going on right now, and it does feel like things. It feels like things are closer to happening. And again, that this is certainly qualitative, and maybe it's just me again having some hopium, as they say. But it certainly things like feels like things are getting closer in a way that they haven't been. Uh, I would say in about a year, right? I think last year when they were starting to make some, when they did convertible debt and they had their agreements, it really felt like things were close, and then it's unraveled a fair bit. But it seems like things are potentially lining up, and there's a lot of optionality here. Transient Stacker says it's been a long wait. I started investing in 2017. Yeah, so you're even longer than me. I invested in 2018. It has been a long wait. I am down quite a lot on my initial shares, and I'm still holding. I averaged down um, last year or the year before. I think I'm gonna not 100%, but I'm thinking of buying sort of another 25% or 30% of shares again uh, in the next week or so. So we'll see. But anyways, thank you very much for sharing, hopping on the stream and sharing this time with me. I really appreciate it. I'm gonna hop off now, and